Welcome to the lecture for Chapter 12. I'm going to take a little bit different approach in this chapter. I'm going to give you some definitions and describe what some items mean in terms of cost accumulation, tracing cost, and most importantly, how costs are allocated to different products or different activities. But about half of the lecture, I'm going to use an example of a company that makes two different kinds of toys and look at both a kind of a crude way to do it, which is what most companies do, and a more refined way to allocate those kinds of indirect costs and see what the benefit of that is. So rather than following the text specifically, I'm going to use a detailed example, I think, to illustrate those concepts. So first of all, a little bit of terminology. So a cost is, and I'll read this verbatim here, a payment of cash or a commitment to pay cash in the future for the purpose of generating revenues. So it's buying raw materials that I'm going to turn into finished products. It's hiring employees and paying them to make my products, to assemble them, to run the machinery to create them, whatever the case is, that I can then sell later. It's incurring supplies and maintenance components and all of those kinds of things so that I can earn revenue in the future. A cost object is anything for which I want to measure those costs. So the most common one would be a product. Maybe I make a variety of different products and I want to analyze all of my total cost relative to each of those products so I can say how much does product X cost, how much does product Y cost, how much does product Z cost. I may also want to analyze my cost relative to geographic sales territories, so I know where am I spending the most money. Presumably that should be where I'm getting the most sales. It could be departments within the company, or it could be an activity. As an example, a hospital would want to know how much does it cost us to do an MRI or to do a CAT scan. That would involve a lot of different kinds of costs. So that's what we talk about by cost object, is how do we want to measure things? What do we want to measure them against? So we can have direct cost and indirect cost. So direct costs are fairly easy to trace to an object because we can see it with our eyes. If I'm making picnic tables, the example from last chapter I used, then if I see on the bill of materials, which is like a recipe for how to make the picnic table, I can see I bought so much lumber and I can see the lumber in the finished product. I can see the brackets. I can see the fasteners that I used. All of those things I can see in the product. I can see the effect of direct labor. I can see that the boards were cut and drilled and routed. I can see the impact that that direct cost had on that. Indirect costs would be costs that can't really be identified in the product, but were necessary in order for the product to get made. It could include indirect materials, like maybe I used up sandpaper. I can't see the sandpaper in the finished product, but I had to use it up to get to it. It might include things that are difficult to measure on a per product basis, like glue or things like that. And then it could include indirect labor, so the cost of a supervisor overseeing my picnic table assembly department. That person is necessary for my production to take place, but they don't physically touch the product or alter it, so it's an indirect cost. The cost of my factory, the cost of the electricity in the factory, the insurance for the factory, all of those costs associated with production, I can't directly trace them to the product, but they're incurred when the product is produced. If I wasn't producing products, if instead I was buying all of my picnic tables from a company somewhere else, I wouldn't have a factory, I wouldn't have a supervisor, I wouldn't use glue. None of those things would be incurred if I wasn't creating products, if I wasn't involved in manufacturing. So one way to think about it is to think about a house being built. So if you're a home building company, one of your most likely cost object is a particular lot in a particular neighborhood. So maybe it's neighborhood ABC and this is lot number 10. So for that cost object, I want to track all of the direct materials that go into that project, into that product that I'm building. That would be all of the lumber that you see there, and trusses, and the concrete for the foundation, and sheetrock, and roofing shingles, and insulation, and windows, and all of the physical stuff that's going to go into that. It's going to include all of the direct labor, so paying framers, paying the guys that do the foundation, paying roofers, all of the people that are going to be on the job actually touching that house and converting raw materials into a finished home. And then there'll also be some overhead costs, some indirect cost. I probably have to have some supervisors that drive around and make sure people are doing things correctly and complying with safety standards. That's a cost. That person has a truck. The truck burns gas. Has to be oil changes and all kinds of maintenance issues. So I have those kinds of indirect costs. I might have an indirect cost that I had to pay an architect for the plans for the home. All of those kinds of costs are not seen in the end product, but are necessary to get that house built. So here's another way of looking at that. I've got different jobs. Those might be houses on different lots as an example. So I incur material costs, I buy raw materials, and I send them out or use them on different jobs so I can keep track of that by job. In that case, my cost object are these three jobs. I'll incur direct labor costs, so that's through my payroll system. I'll figure out using time cards how much labor was done on each job. And then I'll apply overhead. I'll look at all of my overhead, and this is the tricky part. I've got rent for my factory, I've got supervisors' wages, I've got forklift drivers, I've got quality insurance inspectors, I've got all these costs that were incurred for the whole factory, and now I need to make an allocation decision. I need to say how much of that overhead should go to each one of those jobs. That's the tricky part. And that's what they talk about in the book, is about choosing cost drivers. So what kind of activity? Was it labor hours? Was it pounds of product? Was it square footage of homes? What kind of activity quantity should I use that drives those overhead costs that I can use to allocate that back to those jobs? So at the end of the month, all the factory overhead costs are allocated to the various jobs using a predetermined rate. And so some common ways of allocating are either direct labor hours, how many hours were spent on each project. If a lot of your overhead costs are supervision, then direct labor hours make sense to use as a cost driver. I could use direct labor cost as my driver, so I could allocate them as a percentage of labor cost. If a lot of my overhead costs are related to fringe benefits, then that might make sense. Or I could use machine hours. How many hours did each product require of a machine in the factory? If a lot of my overhead costs are depreciation, then machine hours might be a good base. So one kind of refined way of doing this is called activity-based costing. And the objective here is to try to get the most accurate depiction of what the allocated overhead costs truly are, so that I understand if I increase the sales of that product, it's going to drive higher overhead cost associated with that. So the goal here is to charge products with the overhead costs that they actually consume and try to do a better job than what might be an arbitrary allocation. The key thing to keep in mind here, and I've got this in red, and this is not in your book, this is just extra content for you. Activities, and when I say activities, I mean like inspections or moving material around a factory or supervising people. Activities consume costs. Okay, so driving forklifts means I got to pay a forklift driver, I have to maintain the forklift, I have to buy propane. So that activity of moving stuff around consumes cost. The products that I'm making are going to consume activities. Some products require a lot of forklift driving, moving stuff around. Some products require a lot of engineering work. Some products require a lot of inspections. Other products don't. So we should use the extent to which a product consumes activities as a way to allocate the activities. And I'll show you an example here. So first, I'm going to go through this example and use what I would say is kind of a crude or arbitrary factory-wide overhead application rate. So in this case here, let's assume that my factory has overhead, meaning supervisors, forklift drivers, inspectors, engineers, that sort of thing, of $350,000 and I'm going to use a factory-wide activity of direct labor hours to allocate that 350,000 to my products. So in this case, let's assume that we have 50,000 direct labor hours in our factory over the course of a year, and that I make two products, robots and race cars, two types of toys. The robots require 10,000 direct labor hours, race cars require 40,000 direct labor hours. So the race cars are more labor intensive. So as you can probably imagine, they're going to get more of the overhead. So in that case here, I produce 50,000 robots and I produce 250,000 race cars. So the factory-wide rate, I take my overhead of 350,000, I divide by the total number of direct labor hours, I get a predetermined overhead application rate of $7 per direct labor hour. When I look back to how many labor hours I'll spend on each of those two products, that means I will apply 70,000 in cost to robots, I'll apply 280,000 in cost to race cars. So now I want to figure out, what do my robots cost and what do my race cars cost? So I'm going to use prime cost, and prime cost is actual direct material and direct labor, so costs that I can directly trace to the product. In this example, that's $4 for robots and $3 for race cars. And then I have to add that factory overhead because that's a cost I'm going to incur in order to commence production. So in this case, I take the 70,000 that I've applied to robots, I divide by the number of robots, that works out to $1.40 each. So I believe my total cost to make a robot is $5.40. Say I'm selling those for $7, I'll say, well, I'm making $1.60 on each robot and I'm okay with that. I do the same thing with race cars, 280,000 that I've allocated to this kind of product, this cost object. I divide that by the number of race cars, I get $1.12. So I believe my race cars are costing me $4.12. So now let's take a look at a slightly more sophisticated way to do it. So instead of just taking one big pool of factory overhead, I break it out into activities. So I spend some time maintaining and setting up machines. Okay, that's machining. Excuse me, I have machining costs. That's depreciation on machine and maintaining the machinery. I have $80,000 involved in setting up production runs. So getting the machine in the right position, putting the jigs out, getting materials ready, that kind of setup activity. That costs me $80,000 a year. Moving materials, that's the forklift drivers. So I'm paying forklift drivers, the cost of the forklift, the maintenance of the forklift, all of that, that's $70,000. And then I have costs for inspecting products, $50,000. So I've taken that $350 and I've broken it out into what kind of activities it represents. Then I can look at each of those products and say, what do those products require? Okay, so what kind of activities are those products consuming? So robots consume 20,000 machine hours. They have 25 setups that I do over the course of a year, 140 moves, and 1,200 inspection hours. And you can see the same figures for race cars. So now I know what my total machine hours, my total setups, total moves, and total inspection hours. That allows me to come up with a rate or a cost per unit of activity. So I can divide my cost of machine hours by the total machine hours and see that I should be applying $5 per machine hour when products use machine hours. I take the 80,000 of setups divided by 100 of those, that's $800 per setup. Moving product around the factory, 70,000 divided by 350 is 200, and then inspection hours are $12.50 per hour. One of the things that often is enlightening when you do this is you'll get a surprisingly high number. You might look at this and say, wait a minute, it costs us $200 to move a product from one part of the factory to another. Well, I'll come back to that later, but that should kind of incent somebody to try to reduce the number of times we're moving product around in order to restrict cost or lower costs. So now I can go back to my robots and say, well, I know how many machine hours they require. I can apply the $5 per machine hour to that level. Same thing with setup, same thing with moves, same thing with inspection hours. So in this case, my robot should get 163,000 of my overhead cost. That works out to $3.26 each. I do the same thing with race cars, and I get 75 cents each. So now when I look at the cost, I have that same prime cost. Direct material and direct labor doesn't change. So that's $4 for robots, but they're really consuming quite a bit of my factory overhead, $3.26 for each robot. So my real cost of robots is $7.26. So if I was selling them at $7 and thought I was doing well, I'm actually losing money on each one of those robots because they're placing a lot of demands on the factory overhead. Meaning if the sale of robots, if we run a promotion on them next year and it doubles, my factory overhead is going to go up considerably. I'm going to need a lot of forklift drivers and all of those things to be able to accommodate that. Race cars, on the other hand, have less factory overhead than our crude method showed, only 75 cents, so my cost is actually lower. I may have been overpricing my race cars and not selling as many as I could. So here's how those costs compare, whether I do it with a factory-wide rate or an activity-based rate. Now, the one thing that's good about a more refined kind of allocation system is it focuses managers' attention in the company on trying to eliminate what we would call non-value added activities. Think about this. If you were going to buy a picnic table and you were looking at buying it from one of two different companies, one company has one large factory and they've organized it such that material moves from one station to the next without requiring a forklift. So that company, material comes in one part, it comes out the other end finished, no forklift driving is required. They have no material moving costs. The other factory has 5 separate buildings that all of their machines are in. And so they have a whole fleet of forklifts, people driving material from one building to the other. They have considerable moving costs for the product. You as a customer, would you be willing to pay more for the picnic table that comes out of the second factory? Well, of course not. Driving things around a factory provides no value to you as a customer. You're not willing to pay for that expense. So that's the type of expense that a company should work hard to reduce. So how can we produce accurate products with fewer inspections? How can we produce products with less moving stuff around cost? All of that. So it's not just about reducing overhead in total, but about reducing non-value added overhead is the key thing. And this method really draws attention to that. So I hope that was beneficial to you. I look forward to talking to you in the next lecture. Thank you.